when, okay, when do you use the last up close candle before the down move in price? If you're looking for a bearish order block, because some of you are probably thinking, I wish he would have said, I heard you. How the hell do you do that? I mean, their head. He's reading my mind. This is weird. All right, so we have a price run, okay, that may have a series of green candles or up close candles, because my up close candles are green. You'll have a series of up close and then maybe one or two down close candles, and then you'll have a down close candle right before your last up close candle. Okay, if there's a break in this, for instance, let's say this candlestick right here was a down close candle, or it would be a black candle for my charting, then I would have used that candle as my bearish order block, and none of this down here would have been a factor for it. How's that for simplicity? Real simple, isn't it? But if you ever have a series of immediate consecutive candles, you have to define the range that all of those candles make. Divide it in half, divide it in quarters, and the best setups are going to form below mean threshold, which is the middle of the entirety of the multiple candlesticks that make up my ICT bearish order block. Also, the importance of, if you're buying down closed candles and you're treating them as a bullish order block, you absolutely do not buy a down closed candle that's outside of the range that just broke. Okay? Never do that. Okay? Because you don't have the experience to know if that range being broken to the upside is going to be sustained. You don't want to do that. So what you want to focus on is this. I need the trend line thing here. In terms of price, generically speaking, if you think this is the part that's important, okay? If you think that the market is likely to get up to, say, here, okay? If you believe that the market's going to go up here, and we traded, and now we created a dealing range, and I've already defined how to determine a dealing range, but your bias says it's going to go up here, okay? In this run here, that's your dealing range. Splitting that in half, where is the ideal entry points for a order block? Is it down here or up here? I want to see a down close candle in the upper portion of this range right here. So it would be like this. In that area, that's your area where you would look for a down close candle in here. Okay? Caveat. Now this is an amplification of the lesson of me teaching the PD array matrix. My students that paid me did not get this lesson. So you're getting something fresh right out of the oven. If there is a fair value gap on the time frame you're looking at in this range or the lower half, you do not buy a down close candle in the upper portion because it won't hold. It will drop down and reprice to the inefficiency that many times will have a order block associated with the fair value gap. Those two together will be confluence, and you're in a discount here. And then you can reasonably expect to see the market do that. Okay, so that's why it's important that you start with one PD array, learn it, but it's not going to stop there. You're going to need to know the PD array matrix, even if you don't use them as entries. Understanding what they are and how they form inside of a price run, it's part of the whole process of determining, why do I buy that down close candle and not that one? Why do you buy that fair value gap and not this thing? How are you able to pick this PD array and you ignored this over here? I just taught you today. See, there's certain things that are germane. They're salient points that are useful because they're my concepts. I know what I'm doing with them. You don't know what you're doing with them. You only have an introduction to them. But an introduction still is light years beyond the scope that retail stuff works. Far less than this will. This stuff is It's finite. There's rules to it. Which support and resistance are you going to trade? Which support and resistance are you going to trade? How do you define your support if it's retail driven? What defines that for you? Everybody's going to have a different diagonal trend line. Everybody's going to have a different support and resistance level, unless we take our attention to everybody uses one time frame. It's the XYZ time frame. It's the 15-minute chart. It's the hourly chart. If all of us were forced to say, okay, by a show of hands or multiple choice or whatever, is this the support you would you use as your support for that time frame? And say we're looking at hypothetically a 15-minute time frame. If that's the case, and we're all forced to give our personal opinion about what is support and what is resistance, we'll probably have a closer clustering around one or two levels that would be predominantly viewed as support or resistance. But how many of you are trading off of a 15-minute chart? Not most of you. Most of you are looking at 1-minute charts because I've poisoned your mind thinking that the 1-minute chart is the answer to everything, and it's not. It's an answer to reduce risk and give you more entries, but more entries are not a requirement to do well. The people have been doing this for a while. They just had an epiphany right there. They're understanding now why their down closed candles they thought was a bullish order block went right through it and went lower, but still respected the dealing range. Didn't go lower than here. How do you know when to buy it down here and when to buy it up here? He's buying in a premium. Why is he buying in a premium? His video says, I just told you why and when.